Barclays Bank was the first to come forward, held up its hands. Barclays was fined $450 million by British and American authorities in June. 30% discount. Nice work if you can get it for coming forward first, but fell victim to a huge public outcry, lost the chief and the chairman. The scandal had cost the jobs of Bob Diamond and the chairman and the COO as well, Jerry de la Maizière. A month later, the scandal hit the rest of Wall Street. The New York and Connecticut attorneys generals subpoenaed several top banks, including Barclays, UBS, Citigroup, Deutsche, HSBC, JP Morgan, amongst others, RBS. 8 days ago, the first LIBOR arrests were made here in the UK. 3 men aged between 33 and 47 interviewed by the police. Reporting restrictions are now in place. That obviously restricts what we can talk about on that. Jim Bolden is not restricted from talking about. Jim, what can one say?
Yeah, I mean, some of the words used in even what the SFA put out shows that it was systemic at UBS, that many dozens of people knew about it, that the emails were flying around without anybody really carrying that. And I think that anybody would read these emails one day. It just leads me to believe that so many people in so many banks knew what was going on, but for some reason the high echelon says they did not.
In a word, are we expecting more fines? He's pretty much told us we are.
Yeah.
Who's next?
The Royal Bank of Scotland is next, probably in the new year. They've been negotiating what the fine will be. It's likely to be larger than Barclays, but obviously nothing like UBS's.
RBS?
And then more arrests as well. They must be coming.
That's the more difficult for us to report until the cases come up.
I don't quite understand your answer concerning the Fed's use, the New York Fed's use of LIBOR. On the one hand, I think you have said that, quote, we acted very early in response. We were worried about it. We were concerned about it. But it appears that the early response was to keep using it, which means it appears that you treated it almost as a curiosity or something akin to jaywalking as opposed to highway robbery. I think I just heard you earlier in your testimony say, quote unquote, it was our best choice. There are other interest rate indexes out there. How can a number that you know has been manipulated, how can that possibly be the best choice?
Well, again, we were concerned about this, and we did the important, very consequential thing of bringing it to the attention of the full complement of regulatory authorities that Congress has given responsibility and authority for market manipulation and abuse.
But you weren't obligated to use it. The New York Fed was not obligated to use LIBOR, yes or no?
No, of course not. But we had to make a basic choice among alternatives at that time, and I think that was the right choice back then.
Between a manipulated number and a non-manipulated number.
No,
All right, well, a massive change is coming to financial markets in 2021 when LIBOR will be phased out. So what options might investors have for re-benchmarking? Well, just about everything. Ameribor may be a solution. Ameribor is offered by the American Financial Exchange, and its CEO, Richard Sandor, joins us now to discuss. Brian Chung also stopping by for the conversation. So, Richard, I guess let's just start with, what is Ameribor? What do we need to know about this benchmark that I think many of us may not have heard of before?
It's a weighted average of interbank lending that occurs in a given day. We have 127 regional and mid-sized banks and 1,000 community banks. So it's really a market-based benchmark, which LIBOR was not.
So, Richard, LIBOR, it's going away in 2021. It's been, basically scandal-ridden in the past few years, which is a reason why it's being phased out. For those that aren't familiar, it's a key transmission mechanism for, central banks to kind of get their interest rate targets out there. It's also used to benchmark instruments like swaps and also collateralized loan obligations and whatnot. Now, you serve mostly community banks, is that correct? Why is that? And, how is that different than maybe what the Fed is proposing as its own alternative?
Two things. We represent regional mid-sized community, and what distinguishes us and why we started this venture is it was amazing to me in 2011 when the scandals broke that America, the world's largest economy, did not have its own benchmark. How could it be that a $20 trillion economy was having rates set in London by 18 banks calling each other?
Yeah, yeah. Now that you explain it that way, it does seem ludicrous.
It's ludicrous. And so we trademarked Ameribor, we filed for a patent and said, let's get an American-based benchmark, and one that's not a poll. Remember, LIBOR was like electing the U.S. president by a Wall Street Journal poll, okay, as opposed to having an election. You had 300 million a day trading that called for pricing on $200 trillion based on 300 million and a poll.
But Brian says the Fed has an option?
The Fed has an option, and we're different from the Fed.
Yeah.
The Fed's option is a risk-free rate. It's based on the repo market. It's collateralized by government securities. Ameribor is an overnight unsecured rate, so it's got a credit alternative and really represents not the yield on government securities, but the yield on borrowing and lending on an unsecured way. And that's how most lending occurs, to auto dealers, to corporates. It's all unsecured.
So how do you time, sensitivity to this? Because LIBOR is going to stop being published in 2021, so regulators say. So what's your pitch to companies right now in saying we need to start indexing your instruments to things that are not LIBOR?
Well, we started in 2011. Everybody said, go back to Chicago. We don't need it. LIBOR is going to be here forever. We have zero interest rates. There's no need to plan for everything. In the same way, the journalism schools didn't start using PCs until well after 75. It took 5-10 years.
Oh, yeah.
And all innovation, industrial inventive activity, financial inventive activity, interest rate swaps, financial futures, junk bonds, mortgage-backed securities have a 10-year gestation period. Markets have to be built. They're not like spontaneous combustion. And this means educating the accountants, educating the lawyers, educating the treasurers, educating the ALCO committees, going to academic conferences, having it introduced in MBA programs, speaking to 23-year-old graduate students who, by the time they're practicing, they've learned about it in college.
Welcome to the Crypto Teacher. And guys, please like and subscribe. If you do like what you're listening to, please inform your friends and family. It's a very imperative time we get back to learning finances and understand how the world really works. Because once we understand how the world really works, we do not fall for the same tricks, because we understand that everything is planned. Now, don't forget about the books, Crypto Teacher and WO Book. Also, want to thank those who donate to the Cash App, Patreon. Remember, I have the newsletter coming out on Patreon. Now, guys, we're going to get into Bitcoin first. Of course, Bitcoin was under 99.9. We went up to, I think it was like 97. Guys, make sure we are paying attention to the stable coins. XRP is closing the gap with Tether. Remember, XRP is our other indicator. We know BitMEX needs the Bitcoin to do the derivative trading with XRP, Ethereum. So we know Bitcoin is going to take that leg up. Remember, I said this month we should stay above 10,000. Also, guys, make sure you're staying focused on the volume. So make sure that we are paying attention just to the fundamentals. Now, guys, we want to get into some important, this is probably going to be the most important video I've ever done. Basically, if you listen to the actual video, just going over LIBOR, and it's going to be really quick. Now, the Federal Reserve endorses Ethereum's alternative to LIBOR. Now, you've already listened to the video, so you understand what LIBOR is, a benchmark. And just by fluctuating it, just by, a penny or a half a penny, you're talking about hundreds of millions of dollars that the banks can save. Now, those who've read my book already know that I went over LIBOR. LIBOR is the biggest scandal that you never heard of. So many people disappeared, and I'm going to do a video probably one weekend on LIBOR. It'll blow your mind. I didn't want to touch it, but because I saw this article, I thought it was funny. So, but if you listen to him, he lets you know that they've been working on this since 2011. And what did he say? It takes 10 years. What is 10 years? 2021. When are we supposed to have the digital dollar? 2021. Basically, JP Morgan, the Fed, basically what's going to happen? They're going to launch Federal Reserve 2.0 on blockchain. We're going to have LIBOR on blockchain. Ethereum is going to be moving trillions and trillions and trillions. You're talking about hundreds of trillions of dollars. You think Swift is big. You haven't looked at LIBOR. But guys, basically LIBOR controls, just about every loan. Your student loans, it controls the rates. So when it comes to student loans, it comes to mortgage loans, car loans, it's all bundled together. And Deutsche Bank is the one who holds the majority of the derivatives. So guys, this is so amazing because basically it's all connected together. You can clearly see it. Just like I said, they're going to run this up. You're in the perfect space. You're in the perfect space. And the timing is just amazing. It's like I said, 2021, all this distractions you see on TV is there for a reason. Because they want you to focus on that. They want you to be emotionally attached on that and not focus on what's important. And that's making sure you're providing for your family. That's the only thing that's important. Teaching your teaching your kids, the morals and values and making sure that they're earning money the correct way. That is the only thing that's important. But the fact is that if you're into gossip and, emotional attachments, what that does is that leads you down the wrong direction. And that's how they keep that. So they've been working on this LIBOR moving over to blockchain. Because remember he said LIBOR is going to end in 2021. This is the replacement of Maribor. Guys, this is it's out of this world, guys. Out of this world. But definitely, guys, we know that this whole system is going to be moved over to blockchain. Now, we're going to get into that. Now, if this whole system is going to be moved over to blockchain, like I stated, guys, we're not going to have no reset or big stock market crash. Yes, the stock market is going to go down. But you're going to have a big consolidation, like my book says, and the corporations are going to start running it, and your government is going to be gone. Your corporations are going to be your government. And you can clearly see that. So if they can move this $1 trillion market over to blockchain, the whole market is going to be imaginary. You're just going to be in an illusion. That's it. It's already a simulation already. Once they move this over to blockchain, it's really going to be a simulation. So I need for you to understand the direction that they're moving into. They can print money all day, but they won't have to once they get this system moved over in 2021, where they can just airdrop with a push of a button, guys. Imagine that, where I can send hundreds of trillions of dollars just by hitting the enter key. Come on, guys, let's get with it. That's what they're moving towards. Stop thinking that things are going to collapse. It's not. That's what they want you to think. While they're moving the money over, and the game is going to keep going, guys. Monopoly don't end. What do? You take out some pieces of paper and you start writing on it. What did they do? They created a new blockchain system so they can run it. Now it's going to be free to run. Now I don't have to worry about paying all these people to print the money, watch the money, stealing the money. Everything is going to be tracked. The only system not going to be tracked is whose system? JP Morgan's Federal Reserve 2.0. What is that? Xrp, whatever it's called. Basically, where you're not going to be able to see their transactions using, the Zcash network. I mean, the Ethereum blockchain, but the Zcash format. So, guys, it's definitely coming together. I just need for y'all to open your eyes up. Just make sure you're spreading the video on social media. So, therefore, everybody understand it's not going to happen the way you think it is. In my book, I tell you that if it was not for cryptocurrencies, the economy would collapse, but it's not. It's not going to collapse, guys. And you can clearly see that this video proves that. It's like I said, I'm going to get in more detail one weekend on LIBOR, because LIBOR was amazing. And if you're a researcher, do your research. And you'll see how many people that disappeared. And I ain't talking about they went on vacation. And guys, just getting over to world news. We have, of course, U.S. banning China flights. So, Guys, the tensions are rising. We know why tensions are rising. I'm going to play a few Anthony Sutton clips. As you know, he's the man. He basically formats the plan. We also have China with UK over Hong Kong battle. So we all see this rising tension, but it's on purpose. It's all planned. Don't forget about that. And then also we have the Senate passes a bill for PPP loans. I think they're extending it to 24 weeks, you know, as far as starting to pay it back, the flexibility. So, but guys, that's all I have for you. Don't forget about the books, Cryptoteacher and WO book. Also, the cryptos, Coinbase, Bitrue, Binance. Don't forget about the stocks. We have the bank stocks. We have the cobalt, the gaming, your chip stocks. Everybody sitting at home. Don't forget about those stocks. You have the C-word, the biotech stocks. And then also, guys, when all these people out of work, what are they doing? They're drinking, they're smoking weed. Don't forget about those stocks, and y'all have a wonderful day.
Specifically, which ones? You have documents on that?
The third book in this series, which I'm bringing out, takes two wars and one revolution. Well, two revolutions in one war. World War II, the Bolshevik Revolution, and the rise of Hitler, which I call a revolution in Germany. We can find the order behind the Russian Revolution, the Bolshevik Revolution. We can find behind the rise of Hitler. We can find in the maintenance of both of these systems, the transfer of technology to both.
Since you've already proven that Wall Street is behind the Bolshevik Revolution and the rise of Hitler, now you're proving that the order is behind Wall Street.
Exactly.
Now, who's the key figure in the order or figures that mold Wall Street?
In order of dominance, Averell Harriman, partner in Brown Brothers Harriman. Stanley of Morgan Stanley. It used to be J.P. Morgan, then it became Morgan Stanley. Those two are the key.
And what did the order want to accomplish in the Bolshevik Revolution?
You create opposing forces which you place in conflict. Out of conflict, you've got profit, you've got political power, and you can direct history. And if you look at the writings, for example, of the Trilateral Commission, they talk openly in the Trilateral Commission about managing conflict, not solving conflicts, but managing conflicts. Commission about managing conflict, not solving conflicts, but managing conflicts. Conflict management, that's the cry.
So they got the profit, the power, and the management. Mm-hmm. Where do they want to steer history through the Bolshevik Revolution?
They wanted to set up, and they did, two opposing forces. Out of that came World War II. There were logical steps in the process. They used the same bank, Guarantee Trust Company. I think the order has been at war with the United States in general since 1833. There's no question about that when you look at their individual actions.
And that